Hi, everyone. Welcome to Atrium Research's YouTube channel. Today, I have the pleasure of interviewing Elaine Ellingham, the CEO of Omai Gold Mines. For those that you don't know, we have a buy rating and a 40 cent per share target price on Omai. Elaine, how are you doing today?
Pretty good, Ben.
Great. Well, yeah, and listen, you put out a pretty significant press release yesterday in that of the preliminary economic assessment, or PEA. So we brought you on just to talk about that and tell the viewers that update.
Great. No, thanks very much. Yeah. As everybody knows, we put out, I think, three 43-101 resources over the last 2.5 years. So we felt that we had enough to move forward with a PEA. So it's pretty exciting times for us. And we were very, very pleased with the results. So yeah, basically net present value of 556 million for production of 1.84 million ounces. And this is just from the Wenot pit, as you know. We actually have 2 deposits on the property, but we just decided that the Wenot pit was, it's open pitable. We have focused a lot of our work on that, and we just realized that we had enough critical mass behind it to justify making it real and putting out this initial PEA just to let people understand how you can develop that mine. So yeah, some really great things. As you know, the Capex around 386 million. So, building a mine of this size, looking at 142,000 ounces per year average production, that's pretty good Capex, right?
Yeah, the Capex we particularly liked. We're seeing a lot of projects close to $1 billion in Capex and seeing companies really struggle to raise that money. So for a project like this with clear tailwinds and growth in the future, especially with the Gilt Creek deposit, there's a lot of upside there. So just diving into the PEA a little bit, there was a lot of additional work done with this PEA versus typical ones. So, this being a brownfield project, there's a lot of work that you already had. Could you just talk about the benefits of that and what additional work went into this PEA than a typical one?
Right. Yeah. I guess we just, we felt we wanted to get it out to the market. So we started working away at it. And as you say, with the brownfields projects, we have known recoveries of, based on the historical and things like that. But, the road access definitely impacts some of your cost. And we have existing tailings facilities, actually 2 possible or very viable alternatives for tailings, which a lot of projects would not have. It came fairly quickly together. And then I guess the other thing is, because we're working in country and we know a lot of the suppliers, we ended up reaching out. So instead of just using kind of global estimates that a lot of PAs use, we made it a little more real than that. So yeah, I think we're well on the road. And as you said, as a brownfields project, you're dealing with you really de-risk so many aspects of the project. So yeah, we are pleased with this, but it really is just the start. And as you mentioned, we have very close nearby the Gilt Creek deposit, and it has a resource we put together of 1.8 million ounces, and that's about 3.2 grams, and 2/3 of that are actually indicated, so it's well advanced as well. But it's underground and not terribly deep. The top of it's 300 meters, but we just made the decision that it would take a lot of extra time because, of course, when you're doing underground a PEA on that, you have to do a lot of engineering and determine what you get down into the weeds on what the mining method's going to be. So as you know, the most logical way to develop Omai is you work on the Wenot. You start with the Wenot open pit, and you would not probably bring the underground into production until you were, running the open pit operation 3 or 4 years. So by that way, you defer that extra capital. And so on the PEA, it made sense, since the Wenot open pit's the first step, it made sense to just run the PEA on that.
And then, yeah, so we like to highlight it's the initial PEA. There's likely more to come. A lot of that is on the back of the resource growth potential at Wenot in particular. Could you just provide a little commentary on the resource growth and the upside there in the next year or two?
Right, absolutely, because that's we can see it, but we realize some of the investors might not be as clear on it as we are. for example, as you mentioned, like in our 2023 alone in our drilling, we added 600,000 ounces to Wenot. We were not able to bring all of those into the economic pit, and that's just because we haven't drilled those extensions in sufficient deep, density to be able to prove that that they're economic. So they're outside of the pit, and there's a lot of them outside the pit. So actually 500,000 ounces that are just on the sides, the flanks, and along strike on Wenot. And we know that by additional drilling that a good portion of those are likely going to come into the economic pit. And then the other one that's quite noticeable for us is that we focused our drilling from the north side, which is where the volcanic zones are. But we know that on the south side, there's a lot of mineralization in the sediments. And last year we drilled intervals in the sediments alone that were running things like 4.07 over 31 meters and 2.68 grams over 70 meters in the sediment. So we started doing that, but we didn't finish. So we need to do some more drilling of those. So those are actually within the pit, but those are still considered waste because we just didn't drill them. We have like 700 meters within that. So when we bring those in, that will actually really boost the economics of our pit as well.
For sure, and that's what you're getting started on right now with the drilling. Now, before we get into the 2024 plans, just on the mining, again, getting into the further detail that you put into this PEA, can you talk about the phases? There is phase 1, phase 2, that just the detail even you provided on the machines that you're going to be using to mine this deposit.
Yeah, it's I think phase 1 and phase 2 are actually a little bit different than we anticipated originally, because as you know, when you start optimizing things and figuring out how things are moved and the waste and etc. Actually phase 1 is the entire shallow part of the pit, and phase 2 is the an outer slightly deeper and further along strike. So we initially thought that we would be starting on the west end, but when we started optimizing, it ended up actually just being, I think the phase 1 is like 1.9 kilometer long pit. And then the ultimate pit with phase 2 would be like 2.4 kilometers long. So it is essentially what a super pit is. And the good thing about that is that it means when it's that large that you can also go deeper as well. I mean, I always look at the Kalgoorlie pit. The Kalgoorlie pit in Australia is like 650 meters deep. So, yeah, I guess the other thing we didn't talk about is the cost and the cost per ounce and the all-in sustaining cost. As you know, although the gold price keeps getting higher and higher, what tends to happen in the mining business is, your costs escalate as well. So we're really pleased that like our cash operating cost is like 916 an ounce, and the all-in sustaining cost 1,009. In our minds, we thought 1,000 is a really, it's a target. It's a really high target to aim for. But yeah, our all-in sustaining cost is just barely over 1,000 an ounce.
Yeah, and that's great. And again, PEAs may not be super accurate sometimes, but this one we imagine is much more accurate than others. Primarily, like you said, already getting quotes and stuff from local groups, and it is a great price, and who knows where gold will go. Hopefully it continues higher, but nonetheless, you do have that safety net with a low cost operation. So moving from there, why don't you tell us a bit about what's going on in 2024, what the plans are, and where we get to early next year?
Right. So obviously the PEA is a major milestone for us. But as I said, we certainly know that we need to drill on the south side and drill some of the sediments that are within that economic pit, because that will boost the economics profoundly. We also know that we still want to focus in those first couple of years at getting higher grade material. So the average grade we're looking at is 1.5 grams per ton. And we know that those first 2 years, we have some high grade targets that we have drilled. We have a plan to work forward on those, because again, when I say higher grade, like one's about 6-8 grams, the other one's 10 to 15 grams. So those in the first couple of years are very important. We did some work on them this year, enough to know that they're very encouraging, but we didn't get down to actually doing the programs on those. So those are high priority, drilling the sediment side of what's in the design pit. And then we've already started on the east extension of Winot again.
Mm-hmm.
So there's a lot to do. As you know, we still have exploration targets elsewhere on the property, and that's my background. I'm an exploration geologist, and some of them they're extremely compelling. So I think, notwithstanding the fact, we will continue to focus on building an economic mine plan, and further that we have to get a couple holes into those exploration targets, just because they're pretty attractive looking, and you're in an area where between what was produced and what we have in resources, that's 8 million ounces. So
Yeah.
that the endowment in this geological area is phenomenal. So you're crazy not to pursue some of those exploration targets as just in the background. We'll stick to the high priority things, but that has to be part of the equation.
For sure. And then I was just going to say, before we hop off, on Guyana in general, could you provide some commentary on that, your relationships with the government and so on?
Yeah, so Guyana's, the government's extremely accessible. They were up at PDAC, and so we met with the mines minister and the minister of home affairs. They're very engaged in the mining. There's a history of gold mining, so that most of the ministers have some involvement historically in some kind of mining. So it means they understand the business, and they're really want to see Omai come back into production. The support is phenomenal. I have been in to see the president, and notwithstanding the fact they have the fastest growing oil business in the world, he's still more than interested in meeting to talk about Omai. So they all watch our progress, and got a lot of congratulations from them after the PEA came out, and they're very happy to see it. So the support is great, and this PEA also gives us the opportunity to to look at moving forward and start the process of getting an environmental permit and through to a mining license, because we understand that that gives that extra confidence.
For sure. And it's great you have that relationship. It'll probably give you good tailwinds as you progress here over the next few years. And so one thing I just wanted to highlight again was NPV US $556 million at 1950 gold. That's US dollars, not Canadian. And then also you did provide a number at 2,200 gold at 776 million US. And so that's pushing $1 billion Canadian. And here we are with gold at 2350 already. So there's an even further boost to that if you were to look at spot prices, and we'll see where gold goes, but nonetheless, some great economics there. So congrats, Elaine. And then for our viewers, if you haven't found our research on Omai or read it before, you can find it all on atriumresearch.ca. And with that, Elaine, thanks for coming on.
Thank you.